On to branch accounting introduction. See, why this branch accounting? What do you mean by branch? Why this branch has come? See, first and foremost thing is that a businessman wants to expand his business. When he wants to expand his principal place of business is in town A. Since he is a town, he will be known to all in that particular place. Whatever product that he is selling, people associate that businessman with that particular product, and he will be known there. And since it is a small place, there is a reason as why I put up the word as town. When he wants to serve people by producing or by selling the same product in a different town, so you call that particular place as branch. So this one, the principal place, you call it out as head office. So the branch may not be of the same size as that of the head office. So the branch is expected to be like a sales depot where they will be affecting only sales. Whereas in the head office, what they do is that they will manufacture or they will import and then they would be selling it out. Something like that. So a branch which is considered to be smaller in size, the branch which is normally a sales depot and smaller in size, generally we call that as dependent branches. Dependent branches. Say a child in a family is dependent on parents. Correct? When it is smaller, it will be dependent on parents. What sort of dependency a child would have? A child will have fear for darkness. It will immediately associate itself with parents. It will not go out. Correct? It will have fear. So then for when parents give education and when they grow up, they will not have that fear and they will become independent. Same way, branches can also be independent. So branch can become bigger. Bigger branches will normally be referred to as independent branches. This is the generic way of telling dependent and independent branches. But is that really be the reason for calling these branches as dependent and independent? So answer to the question is in the negative. No. There are different points that you have between dependent and independent. What is that? Say if inventory is maintained, who is maintaining inventory or control of inventory or inventory control? Who is having in the case of dependent branches and in the case of independent branches? So who will have inventory control in the case of dependent branch? Only head office. Head office will know what should be the stock the branch should keep. Whereas in the case of independent branch, the branch will decide as how much is the stock they should keep. Correct? Now, next one is customer control. What do you mean by customer control? To which customer you should give credit, to which customer you should not give credit and insist on cash, all that the dependent branches cannot decide and that will be done only by head office. Whereas in the case of independent branches, the branch can decide that this customer can be given with the credit, this customer cannot be given with credit, and cash is to be insisted. So that way you just find inventory, customer, that being debtors control. Then cash control. What do you mean by cash control? How much money they should keep to meet expenditure? Who will decide in the case of dependent branches? Only head office will decide. In the case of independent branches, Independent branch will decide how much cash they should keep and how much they got to remit. Then it is very easy to remember how come all these are current assets. Inventory is a current asset, debtor is a current asset, cash is a current asset. So absolutely no difficulty in remembering that. Then books of account. What is that? You have books of account. What do you mean by that? Who will maintain books of accounts? So in the case of dependent branches, only head office will maintain. That is the reason as why you have for dependent branches, they say how this branch transaction will be recorded in the books of head office. That is the indicator. So the problems will carry an instruction. They will not tell data's method you got to follow or stock and data's method to be followed. What you find in all these cases for dependent branches, they will ask how the above or how the following will be recorded in the books of the head office. So that is an indicator. So if branch transactions are recorded in the books of head office, then it becomes dependent branches. So all the transaction of the branch, when it is recorded by the branch themselves in their books of accounts, then it is independent branches. These are the features. These are the ways through which you identify the branches as what? Dependent and independent. Okay. Say now, coming to this particular aspect, books of account will be maintained by head office. So head office is located in a different location. How branch transaction will be recorded by head office? It is not a difficult task. At branch, you have some staff who will gather information and send the information to head office, and head office will record the transaction. There is absolutely no problem at all for the head office to record branch transaction in their books of accounts. Okay. So such things are dependent branches. Okay. In dependent branches, where the books of accounts are maintained by head office, there are two different methods, or in fact, I would just say two different methods you have. One is double entry method, the other one is single entry method. Double entry method and single entry method are two different methods that you have. Okay. In the case of double entry, once again, you have two different methods of doing it. One is stock and data system. What is that? Stock and data system. The other one being data system. There are two methods that you have. One is stock and data system under double entry and data system under double entry. In stock and data system, how many accounts that you have in the books of head office? In the books of head office, what are the accounts that they will be having? In stock and data system, you will have branch stock, two branch data, three branch cash, number four branch expenses, number five branch adjustment, then number six goods sent to branch, then number seven branch profit and loss account. How many days you have in a week? Seven. Same is the way, seven accounts that you find in the case of stock and data system. Is that right? Now, how many accounts that you will be having? One and only account, branch account. Only one. But in case you have any shortfall of information under data system, you got to prepare stock and data system. That means a stock and data system can independently exist, but data system will be dependent on stock and data system for missing information. So branch stock account, branch data account, branch cash account, branch expenses account, branch adjustment account, goods into branch account, and branch profit and loss account. Say now, if a person is good in stock and data system, automatically he will be very good in data system. So how do we learn things? Not a very big deal. So because the transactions are going to be routine, And for routine transaction, you have routine journal entries that you got to pass, routine journal entries that you got to pass. அப்புறம் தாத்தா கிளாஸ் எத்தனை So all these routine transactions can be recorded, and we can easily understand why an account is debited, why an account is credited. See, now let us just take up that transactions and the journal entries. And this journal entry is passed in the books of head office. Don't forget that. See, number one, the first thing that you find in the case of a branch transaction is goods sent to branch. So goods sent to branch at invoice price. So why cost price is not given? So we all know that in GST for supply, when goods are moving, even GST will be involved there. So therefore, at invoice price only they take it up. What is the entry that you find we are going to pass? So debit branch stock at invoice price. Credit goods into branch, goods into branch at cost, then credit branch adjustment account, the margin, or you can say loading, or you say that gross profit, whatever it may be. This is the entry that you are expected to pass when goods are sent to branch at invoice price. So here I would like to put it this way, reverse in case goods are returned to head office. Reverse in case goods are returned to the head office. What do you mean by that? Debit branch adjustment, debit goods sent to branch, and credit is to be given to branch stock. Is that clear? Now, what is it we are expected to do? Branch is expected to sell. So, cash sales at branch. Cash sales at branch. What is the entry that we are going to pass? Debit, branch cash. Credit, branch stock. What is the normal journal entry in case of cash sales? Anywhere, it is cash to sales. What is the journal entry for cash sales? Debit cash, credit sales. In this case, debit cash, credit. In the place of sales, it is branch stock. Is that clear? Stock is moving out, and this is the journal entry that we are going to pass. Then number three, credit sales at branch. What is the entry that we are going to pass? Debit branch debtors, credit branch stock. Debit branch debtors and credit branch stock. Is that right? That is the one that we are expected to carry out. So what journal entry we pass if it were to be a credit sales? Debtors to sales. So instead of sales, it is branch stock, and debtors we do have. In order to differentiate between head office debtors, we are putting the prefix as branch debtors. Is that clear? Number four, cash collected from branch debtors. Debit, branch cash. Credit, branch debtors. I hope that this item is very clear for you? Are you understanding? When money is collected, cash to debtors, here branch cash to branch debtors. That's it. Then item number 5, if you have branch, bad debts, discount, etc. from branch debtors, you do not differentiate them separately. You just put them as branch expenses and credit is given to branch debtors. Branch expenses to branch debtors will be the scheme of journal entry that you got to pass, and therefore you are expected to not differentiate between discount, bad debts, etc. So you are expected to take it up as branch expenses and credit is to be given to branch debtors. Is that clear? All of you say yes or no. Are you clear about this one? Yes. Then in case of sales returned by branch debtors, then debit branch stock and credit branch debtors. Is that right? That is the way you are expected to take those cases. Is that clear? Is that clear? The next. Item number 7. Head office sent cash for expenses to branch. They have sent cash. So debit branch cash, credit head office cash. It is only more expenses separately we will book. Is that right? Number 8. Expenses paid at branch. What is a journal entry? Debit branch expenses, credit branch cash. Expenses paid at branch, debit branch expenses, credit branch cash. Now we all know that inventory at branch is kept at invoice price, which is greater than the cost. Inventories are to be valued only at cost and not at a price greater than the cost. Let me repeat, inventories are to be valued only at cost, whereas inventories are dispatched at invoice price greater than the cost. Therefore, we are expected to remove the load. This is what you call it out as unloading. So we have got to remove the load. So opening stock, removal of load. Opening stock, removal of load. What is the entry that we are expected to pass for opening stock? Debit branch adjustment and say actually opening stock for which it is a opening balance that you have, debit branch adjustment and credit branch stock, because branch stock will be showing debit balance, that we are just doing it. So quite often journal entry will be avoided and opening balance will be created. Okay, so this has got to be done like that. or opening stock and closing stock. You can put it like that. Journal entry will be avoided and opening balance and closing balance will be created. Then item number 10. So balancing figure in goods into branch, transfer to purchases. So debit goods into branch, credit purchases. Balancing figure in goods into branch account, transfer to purchases. So that will be taken up as what? Goods into branch, goods into branch, and credit is to be given to so debit goods into branch, the other one being credit to purchases. So with that, by and large, the scheme of journal entries we have covered. I would just see that whatever we have covered, based on which we'll be in a position to figure out a problem and we can crack it in no time. Now, in as far as the branch account is concerned and the data system, it is only a sort of a format. So I would like to put out in the format, that is what you can call it as a format or template. So what we can do is that we can have this branch account. To balance brought down, branch cash, branch stock, branch data by stock reserve on opening stock. So, okay. So I would just put it this way. Thickness, then I would just put it. You have branch stock here, the corresponding stock reserve here. So there is a point I want to put it. So goods sent to branch at invoice price. Buy goods sent to branch if it were to be returns. Also at invoice price. Then buy goods sent to branch, loading on the net. To cash sent by head office. By cash remitted to head office. Then by balance carry down branch cash, branch stock, branch debtors, to stock reserve on closing stock. If you total up, the balancing figure is going to be profit and loss account, the balancing figure. Is that right? So a basic introduction for Dependent branches got over. Correct? How do we solve the problem? Yes, we can solve the problem. No big deal. You will take up a problem from ICI study material and we will just find out as how it can be solved. Study material, intermediate, English medium, and May 26 onwards, advanced accounting. So, branch accounting as chapter number 15. And that we would like to take it up. Dependent branches, a full-fledged problem I wanted, there is I want. So, I would like to take up end of the topic. So, it is not there. Hmm? So, what I would like to do is I would like to take up some basic illustration at the initial stage. Book back is there or what? Book back is there, no? Okay. Let us assume that it is not there. I will roll it at the top. This is the format that we were talking about here. This is a big sized problem, not a good problem for as a first problem. Anyway, we will take up one such example number one. We can take it up. So XP Limited opened a branch in Delhi and sent goods costing 50,000 to Delhi branch. Delhi branch sold entire on credit of 62,000. No other transaction occurred at the branch. Prepare branch account in head office books and find out profit. No big deal. So how is that we are expected to carry out? So I normally recommend a problem to be handled firstly under stock and data system and then under data system. Stock and data system under which first one branch stock, debit and credit goods into branch. So if you look at the data, you just find it is at 50,000 and sold at 62,000. 50 and 62. So 50 and 50 and it was sold. So debit branch cash 62, credit branch stock 62. Okay. See now I open branch stock account to goods into branch. 50 in goods into branch. I open up by branch stock 50 and branch cash account to branch stock 62 by branch cash 62. This would end up with my stock account is not balancing. Why? Because on the debit side I have taken up at cost and on the credit side I have taken up with that taken this up at the selling price. So therefore the difference I will take it to branch adjustment account 12. This is a gross profit. So my branch cash will be the closing balance 62. And here I go to take it up to purchases 50. This is the balancing figure. Now, this This is stock and data system. Under data system, so branch account, where you have to goods sent to branch 50. And the cash what they have is remitted to head office. I will put it like that. To head office cash 62. By cash 62. To profit and loss account, you have 12. Here, what is it? We will be having branch adjustment account, to which by branch stock you will have as 12, and therefore that is going to be taken to the profit and loss account 12. So, a simple problem where you have only two transactions. So, in either case, you are ending up with same amount of profit. So, in the next class to come, we will take up a full-fledged problem, and we will attack it tooth and nail. So, with that, we will put an end for today's class as far as introduction to branch accounting is concerned.